Hey guys, this is Doc's Market Minute for Wednesday, August 5th. I'm looking at Apple, and there's been a lot of concern with Apple lately on how it's selling off, and it's already come down a few percent. But again, this is where we need to understand what's going on. What is the context of this decline? And if all we look at is the daily chart, then, oh my horrors, look at this sell-off here. It's a slaughter, right? And this is where everybody gets confused, because what we need is more context for what's going on. Now, when we go out to the monthly chart, we can see that we had just an absolutely parabolic slog here that ran out of energy. And this is what happens when you run too far too fast. Imagine running up a mountain as fast as you possibly can. I'd be surprised if you don't pass out and tumble down at least a few feet, right? And this is what's going on right now with the chart, is it ran out of gas and it's pulling back to find support. Now, where is this support going to be found at? More than likely this pivot level at about 100. So this is very, very common for us to see price coming up to a round number resistance level, offering some psychological resistance and perhaps profit taking. There was also some bad news around this area too, less than inspiring results. But then we got wind of what was going on here in terms of the stock split, and everybody went nuts pushing this thing up. And so now retesting this pivot level from above is a very normal course of action. So what can we do to take advantage of this and perhaps sell into this weakness to secure a better position? So the one thing I like with Apple right now is the IV percentile, so the implied volatility percentile over the course of the last year right now is running at about 65%. So over the course of the last year, we might have had values that were about 35% of the time were higher than this, but right now we're in that kind of upper 2/3 of implied volatility over the course of the last year. So from a relative basis, it's relatively high. Has it been higher than this? Of course it has, back here in the beginning of this year. But this is not a bad place for us to be selling some premium. So as we look at the August cycle, which is just a couple of weeks away, we can see that, we can even get a 0.5% return just selling puts here. Or we can also sell some bull put spreads at this level. There's a 10 delta, so this is more of a high probability bull put spread. I think there's a good chance that the price might eventually tumble down to about 105 before finding support. I don't believe that it's going to go through 100 and violate that pivot on the very first time down. Now, the only thing that I have to watch on a longer term construct is that this might be turning into more of a weekly head and shoulders pattern. So we'd know that in terms of this. If we do get a bounce from around this area, this might just be building that right shoulder, and then we'd have a target to the downside, which is going to be equivalent to about this level here. So that would violate that pivot, but there's no reason why we can't get a short-term trade. Again, I believe that when we look at this monthly chart, this $100 level, I think, is going to be very heavily defended by all of those investors that already have shares at this level and didn't want to chase it higher. In fact, I think they'd load up again on Apple at about the 100 to 105 level. The other thing that we're seeing just on a technical perspective is that this move lower on the daily chart that we've seen just in the last couple of weeks has been extraordinarily linear. So not only the earnings, it's hard to call it a miss. I mean, the only problem with Apple was sort of their top line numbers were getting a little soft because of decreased demand from China. So that's obviously an issue there. But we're now getting to the point of being extremely exhausted to the downside. So I wouldn't be surprised to see a very quick snapback here, even if that led to a lower high as it tested the 200-day moving average and perhaps rolled over again to retest that level or head down to that 105 level again. So that's what I would see for Apple in the short term here, and I see a lot of different trading possibilities around this because of the fact that we have higher implied volatility, more fear into here, and more fear actually means more opportunity. That's it for today's Market Minute. Thanks for listening, folks. We'll see you tomorrow.